Hey, what's going on, guys? Leo here. So Ethereum has finally done it. It has finally broken its all-time high after a very long 4-year bull flag. So we're going to get into that, and we're also going to get into the Ethereum Standard, which is a really interesting concept because it draws on the gold standard, which was ended in 1971. So let's go ahead and dive in here and take a look. So, we've been in this bull flag, right, all the way back to November 2021. And we have finally broken out above it. We've actually broken above our all-time high just slightly. I think it was like $100 that we got above it. And right now we're just kind of consolidating here. When in doubt, always zoom out. Take a look at the big picture as to what's going on. And so what's going on was we're just at the top of this channel, right? We're at the top of the channel. We're at the top. We're at the all-time high resistance. And so what am I expecting here? Maybe we can push up a little bit more in the coming days. What I would actually like to see more is more consolidation moving to, because what you want to see is you want to see a healthy trend, right? You don't want to see this, right? You don't want it to look like the crosshairs on the chart and just go straight vertical, because that's how you end up in markets that get overheated and they end up pulling back very, very violently. And so what I like to see is a 45-degree trend, a very healthy trend of just slowly grinding higher, continuing on. And that's really what I'm hoping to see here. But let's go ahead and get into the Ethereum Standard that I've been kind of playing around with. And in order to understand that, you need to understand the gold standard and what happened whenever we went off of it. So we're looking at a chart here going back, the last century. And in 1971, Nixon took us off the gold standard, which means that basically it used to be that you could exchange 35 US dollars for 1 ounce of gold, but that was ended and they started to just print money out of control. And so what we saw the price of gold go from being $35 an ounce for many decades to skyrocketing. Now, it's not the exact same. I'm not saying that I believe that the U.S. government's going to, come up with a massive Ethereum reserve and they're going to peg the dollar to it. That's not exactly what I'm saying. It's a similar dynamic, but it's not exactly the same. So let's go ahead and take a look here. We're looking at the fully diluted market cap of Ethereum, looking at its ecosystem TVL being the blue line. And what you'll notice is that the fully diluted market cap always stays above. In fact, several little deviations above. I believe it was 3 times was the prior bull run's peak from the ecosystem total value locked. But what you're noticing is that the total value locked is starting to go up, and so is the price. So there's obviously a strong correlation between the amount of assets that are tokenized on the Ethereum blockchain relative to its market cap. And if you think about it, it makes a lot of sense, because it's essentially saying that, hey, as the more assets that are being secured by this network, the more valuable the network is. And the more users that's on the network, the more valuable that the network becomes. And we're seeing stablecoins starting to explode. We're seeing the largest financial institutions in the world beginning to tokenize RWAs on chain. And so this is the parallel that I see, that whenever the government had gold pegging, it was essentially backing the dollar's value, the purchasing power of the dollar. It's similar in that you have ETH, the underlying asset, because of proof of stake, securing all of the tokenized assets on the Ethereum network. Now, it gets really interesting because let's say that the United States government was to go back onto the gold standard. Estimates range from the price of gold going between $10,000 and $16,000. So that is just for the country's currency. It has nothing to do with backing the value of stocks, has nothing to do with backing the real estate ownership. And so with Ethereum, it's even more the case, because you have tokenized stocks, you have tokenized bonds, you have digital identity, just general DeFi, financial infrastructure, you have global world currencies, which is like $100 trillion. But the point I'm getting at is that you have roughly somewhere between 500 trillion to a quadrillion plus amount of assets that can be tokenized onto the Ethereum network. Now, if we see a similar dynamic play out, where you have gold securing the value of the dollar and you have ETH securing the value of the entire global financial system, the question becomes, how much is that security worth? And I would say that it's worth at least the same amount that gold would be worth if we went back onto the gold standard, which would put Ethereum somewhere around 85 to $100 trillion market cap. Now, keep in mind that it would be, in my opinion, it would be more than the gold standard, because the gold standard is just backing the currency. It's not backing all these other world assets. I mean, you can tokenize art, real world art. I'm not talking, you can have a certificate of ownership securing the ownership rights of, say, the Mona Lisa. So you can have intellectual property rights. There's essentially all of the world's assets, all the world's financial contracts, everything can be tokenized and secured by this network. And I just realized that my face is in the way, so you can't actually see the chart that I've been showing you. Just going back to the ecosystem TVL again, so you can actually see what I'm talking about. You have the blue line here, which is the ecosystem TVL, and then you have the green line, which is the market cap of Ethereum, and you can see that they're both just going absolutely vertical. And so that raises the question, what is this network going to be worth when it has 10 trillion, 50 trillion worth of assets, tokenized, secured, and that financial infrastructure built out on the network? I would argue that Ethereum, as this is adopted as global financial infrastructure, and Wall Street realizes how much value that they can essentially generate by using this network, how much more productive that their businesses can be, and as world governments begin to tokenize their currencies, like we just saw the European Central Bank saying that they're exploring tokenizing their currency on Ethereum. We're also seeing China talking about creating their own central bank currency. So I would argue that what we are witnessing is as big, actually I would say that it's bigger than what Nixon did with the gold, taking us off the gold standard, somewhere between that and a petrodollar dynamic, because I think that what Ethereum is it's essentially digital oil, because it can be burned and it has utility just like oil, but it has more scarcity than oil, than gold. So if we go over here, we can take a look at ethdigitaloil.com, and you can actually look at comparable assets for world reserve asset classes as this begins to mature. Now, the one thing I want to note here is that gold, its market cap is not as high as it would be if the United States is on the gold standard. Currently, it's trading at 22 trillion, and I believe the price is somewhere around like 3,400. So, just keep in mind that gold doesn't secure the value of the dollar the way that it used to. So, this would be easily upwards of 85 trillion plus. So that would, if they were on the gold standard, that is. But, if we look at here, we look at world oil reserves, you're looking at 85 trillion. That's the utility aspect of Ethereum. You come down here, you have the global bond market, you have global M2 money supply. And so whenever you're looking at comparable assets that are essentially critical for the global financial system to continue functioning, Ethereum fits in very well with these. When you consider that ownership rights of pretty much all of this and more will be tokenized, secured on the Ethereum blockchain, a price of 706,000 to 1 million per Ethereum, it really becomes inevitable whenever you look at the scale of how big this is going to get. So I think that pretty much wraps up today's video. You have any questions, leave in the comment section down below, and I'll talk to you on the next one.